Good evening and welcome to this session of the live virtual classes conducted by the Board of Studies Academics of the Institute of Chartered Accountants of India. We were discussing the concept of accounts of companies before we parted last week before Diwali. Sure, you had a great Diwali, and we're back again for completing this topic. A lot of you are putting in good evening messages. Let's see. We have, I'm sure Linga is here, Navneet as usual. Welcome, sir. Ms. Virali is here, and Adilka, Sangeetavani, welcome, and thanks for your greetings, all of you. Kuldeep Nagar, Tanu, welcome. If I missed anybody, I'm sorry. Prerna, yes, welcome. Pooja, welcome. So that's nice. All of you are here. As you come in, I can't keep greeting every one of you, but nice to have all of you here. And those who are not putting any messages but are listening on, or even later, this video when it's being downloaded and listened, I greet you. And let's look into this topic again. We had covered quite a lot of ground in the last two sessions, and I think we came right up to revision of accounts. Yeah, I'm sure. Revision of accounts and rectification, reopening of accounts and revision. See, basic difference between these two is reopening is not voluntary. It is based on an application to the tribunal or court, and the court or tribunal passes an order, right? Whereas revision of accounts is voluntary. So looking at differences, the first difference is this is involuntary. Rather, it is not initiated by the company, whereas voluntary revision is initiated by the company. Right? The circumstances, it can be done only on an application. Okay, by one of these people, either to the court or tribunal, and it should be shown that the relevant earlier accounts were prepared in fraudulent manner, or that the affairs of the company were mismanaged, casting a doubt on reliability. So that is when you can go for this. Whereas here, you have to just show that there is the financial statements of board's report do not comply with 129 audit. Okay, so that then the board decides to revise. Okay. In both cases, the tribunal is the authority, though for a reopening, you can also have the court if it is apprised. Okay. And the period also very important. Here, you can only revise the financial statement or board report in respect of any of the three preceding financial years. Any of the three preceding. Whereas there you can go right up to 8 years, 8 earlier financial years. But that's about it. You can't go beyond 8 years before preceding the financial year or preceding the current financial year. So these are the salient differences. I just thought I'll distinguish between the two, thereby fixing it. Okay, they are totally different sections. They have no connection, but are meant for different purposes. Reopening is purely because of Satyam. As I already mentioned to you elaborately, Satyam, we were caught high and dry. The accounts were wrong, but there was no provision for going back and rectifying. So the government opened a special gate for that and said, for Satyam, you do it. But then they thought, why not have a provision there which will give freedom for any authority at any time to apply and for this, right? To my knowledge, this section has not been invoked after that. It is there, but to my knowledge, it will not also be invoked. Okay, this is for rectification. See, suppose you made a mistake, you can always go back, correct it. Normally, once accounts are presented to the shareholders, prepared, audited, and presented, and are approved by the shareholders, that's the end of it. You cannot revisit it. Exception is 131. 130, right? Now we move on quickly to another important authority. We already saw the investor protection and education authority, fund authority. Remember? The authority which manages the fund. Similarly, this authority has been set up, the National Financial Reporting Authority. As I told you, Satyam had a far-reaching impact, right? In these two chapters, you will find Satyam impact is there. Accounts and audit. Okay. So NFRA or NFRA is a child born out of this. Okay. Whenever something evil or something happens now, we want to create something that will protect or that will. So NFRA was conceptualized by MCA as a protector. Now, the real challenge here was there were serious doubts being, there were serious, shall we say, misgivings as to the efficacy, as to the independence of an auditor. Okay. Satyam, because of Satyam, one single auditor and his greed meant the whole profession had to stand up and be, sort of control. That's okay. Nothing wrong. So this authority was formed. See, in Latin, there is a phrase, his custodius ipsos custodes. His custodius ipsos custodes. Who will police the policeman? So see, it's a cyclical argument. There is no end to this argument. His custodius ipsos custodes. Who will see custodian? Who will take custody of the custodians, or who will account for the custodians? So in that sense, we are the auditors. We are the custodians. In a way, we certify. And we say, now the question arises after Satyam, how do we know about you? So our usual reply was that, look here, we have our own disciplinary mechanism within the framework of the Act, the Chartered Accountants Act. The disciplinary committee is there. We discipline ourselves. Erring members are brought to task, questioned, punished. Where fraud is involved, the court will take case. But short of that, if it is professional negligence, then we have the capability to do it. But somewhere, there was no shortcoming in that. This is not a failure of the disciplinary mechanism, because that comes in later. And that was effective. It is just that this one thing became so big, it gave an opportunity for the MCA to step in and say, look here, you are not, for a certain degree, beyond a certain degree, you can't judge yourselves. We need an authority that will look into it. So the NFRA came up with many objectives. We'll see that. The main objective was to look into frauds, etc., and come out with an independent regulatory body. Okay. So the Companies Act, so this was post Satyam, but then the new act was coming, so they were waiting, and then the new act enabled NFRA. Okay. Though 2009, okay, but then the drafts came, then NFRA was always there, and finally it was established. Okay. Now the establishment of NFRA as an independent regulator for the auditing profession will improve the transparency and reliability of financial statements, mainly listed companies and large unlisted companies. So the target here is not every company, but where public interest is high, listed companies where public has invested. Not only that, see, it is not just those people who have purchased the shares and who are today the shareholders. Everybody who is active in the share market is affected. So this is the larger thing that we have to understand. See, today, you may not know about X Limited or Y Limited. Somebody tells you, you have not bought the share, but you're influenced, right? No, there's a larger question which to you I will place. Whether anybody invests in shares based on the balance sheet? No. No. But when something goes wrong, they blame the balance sheet. Today, people are investing in IPOs. People are investing in shares in the market, secondary market, etc. And they do it without having any regard to the financial statement. And I'm very boldly making this statement from my experience as Secretary Tamil Nadu Investor Association for 3 years. I was to beg people, do not invest in companies unless you have the profitability track record is seen by you. No, don't waste our time, sir, with them. In fact, many people in the market, they don't rely on even the background of that company. They didn't even know what that company does. They simply see the prices movement in the market, and they have certain technical charts and certain theories and certain rules by which, based on the price position, they buy and they sell. See, it's worked in the past. Okay, you got guys like Soros, a lot of people in the US markets who have played that game and made zillions, millions. Point is, nobody relies on the balance sheet. Nobody relies on the financial statement when buying. But when the market collapses or when a company collapses, immediately what happened to the auditors? What were they doing? Who told you to buy? I never told you. Please see the balance sheet. Please see the P&L. I have very clearly certified that the profit is so much. I have very clearly given my qualification. Everything is there in front of you. In spite of that, you have purchased the shares at these prices. No, that's not my problem. That's nobody's problem. So, but then the knee-jerk reaction to Satyam was formation of this wonderful body, the National Financial Reporting Authority. Okay. The powers of the NFRA. I call it NFRA, easy pronunciation, but actually it is NFRA, National Financial Reporting Authority. So as the name implies, it is meant for reporting. So it is supposed to make recommendations to the central government on formulation and adoption of accounting and auditing standards. So that is the primary goal. So the ICAI makes it. The ICAI is the body that the process is there. But finally, the central government makes it mandatory for companies, right? It becomes binding on the board. Friends, when the Central Council of the Institute gives me a standard, it is binding on me as a member, as a practicing member, it is binding on me. But it is not binding on the company, the board of directors, our friend, the company secretary, unless it is announced or it is notified by the central government. Now, central government does not notify it based on ICA recommendation. It notifies this based on NFRA recommendation. So it is a NFRA that has the power to make recommendation to the central government on formulation and adoption of accounting and auditing standards. These accounting and auditing standards are basically prepared by the ICA, approved by the Central Council, and then the NFRA goes through it. In that process, NFRA also plays a role. And finally, it is announced. Funny, but in a way it is good. Because in the late 90s, there was a huge IPO boom. Okay, late 90s, riding on the KP wave, but not necessarily part of it. Many companies, because the markets were booming and the markets were good 90s. Okay, NSE had just come in, sort of the capital markets were really looking good, and many companies came for IPO, right? Now, around that time, there was a need for promoters' contribution. See, if the SEBI had just come flexing its muscles, free pricing. Okay, free pricing. There was no CCI, no controller of capital issues. The company decided on the price. SEBI had nothing to do with pricing, except that they gave risk factors. That's all. So it was the investor was given an option to make an informed decision. So price is given, risk factors are given, financial statements audited are provided in the prospectus. Now you take an informed decision is what SEBI was saying. That's okay. I won't go there. Point here is, at that time, SEBI had also asked for 20% promoters contribution. Now, promoters contribution is something, money that needs to be brought in by the promoters, right? Now, that was one thing. If sometimes we said, look here, they already got profits, right? They got huge reserves, free reserves. Now, allot bonus shares out of it and make it part of promoters contribution, no problem. Now comes the catch. Before this current law, this law very clearly defines free reserves, very clearly says how bonus shares can be issued, etc., etc. Now, bonus shares can be issued only out of free reserves, and free reserves does not include revaluation reserve, right? No. Now, central government has the act itself is now very clear, right? In those days, just to give you a background, those days, no such law was there. But general principle of accounting is revaluation reserve cannot be used for allotting bonus shares. You can't revalue assets, and that reserve cannot be, because the accounting treatment itself is different. At the time of providing depreciation on the asset, on the basic cost, the book, the WDV, the carrying cost, you will be charging depreciation and debiting P&L. It will go as a charge to put. On the revalued portion, now you calculate the depreciation that will be reduced from the revaluation reserve. I mean, you know it very well, but the company directors and members of our own institute who are employed in companies conveniently forgot this. They allotted, bonus shares out of, revaluation reserve. Now, I am a chartered accountant, and I have had this problem with 3 companies. The guidance note of the institute is very clear. Institute has given a guidance note to me. The ICAI has given a guidance note, very clearly saying you cannot allot out of revaluation reserve. But that's binding on me. I've had members of the institute on the other side, employed members, saying, Srikant, you are a practicing CA. It binds you. It doesn't bind my board of directors. Correct. Well, it took SEBI another 3 years. I think 98 or 99, they came out with the amendment to the LODR. There is the then regulations, where they said you cannot use revaluation reserve for allotting promoters' contribution shares or bonus shares for promoters' contribution. So it took some time, and it was SEBI which did it. The NCA at that time, the Companies Act didn't have anything. So this dichotomy between binding on a member of the institute, not binding on the company directors and the board, was a major problem. Today, thanks to MCA, this is law. Now it's binding on the directors also, right? So point is, when central government nominates or when central government recommends, it becomes binding on the companies. And that is important, okay? And I think that's good that the recommendation comes from this. And the world over, we have a body like NFRA. For example, in the United States of America, we have the Securities Exchange Commission. That's sort of for listed companies and all that. So it's nothing. This body is not an unknown body in the world. Everywhere where matured financial markets are there, where financial markets are matured and have developed, such a body is needed. Agreed. Then monitor and enforce the compliance with the standards. Okay. So that are 2 levels. 1, whether the directors have complied. 2, once it came to the auditor, did the auditor do his job? Both sides compliance. Then comes the catch. Oversee the quality of service of the professions. So they've made it professions so that all the 3 are covered, maybe even the advocates. But the point is, it's we. Our quality of service, especially auditing standards. whether the audit is conducted in accordance with the auditing standards. So any failure to document, which is why whenever in my office, we are 15 years, documentation has become a second habit for us. Everything is documented. Nothing is oral. Initially oral, once oral, friendly oral, but doesn't happen. That day EOD, before end of day, mail goes. That is, I call in the morning and ask for a particular detail. I say, hey, I need an explanation for this. Can you tell me? Or can you send me this documents or these reconciliations by say 4 o'clock or 5 o'clock in the evening? No. 5 p.m., nothing happens. Mail goes. Clearly documenting what is the issue there. And by which deadline it has to be given, etc. So what I'm trying to say is whether these standards of service are maintained by the professions. And in case there is a need for improvement, how to improve it. Perform such other functions relating to the above activities. One of the important things is for certain category of companies to which NFRA will apply. See, not all companies are coming under NFRA. We'll see that. Only certain companies come under NFRA. Only certain companies will come under NFRA. Now, those companies which come under NFRA has the power to investigate on fraud, on disciplinary action against the auditors. It is NFRA. Now, as in the case of any authority, there is a chairperson with not more than 15 members. And the chairperson shall be a person of eminence, having expertise in accountancy, auditing, finance or law, should be well known and extremely knowledgeable. So the word used here is person of eminence, eminent person, well known, nationally recognized person, whose knowledge is impeccable, whose expertise in accountancy or auditing or finance or law is impeccable and well known. So that such a person will be appointed by the central government. The chairperson and members who are in full-time employment with NFRA shall not be associated with any audit firm. So, if a senior partner of a leading firm of chartered accountants is made chairperson, he cannot continue with the firm. He'll have to quit. And he can't also be part of any related consultancy firms. So, it's a call that they have to take. Usually, senior people who would be ready for retirement, having another 5 years or so, will take up this position as a. So they are employees of the central government. That's it. So during the course of their employment, they cannot be associated with any audit firm, including related consultancy firm. Also, 2 years after ceasing to hold such appointment. So you can remember this part. I say because, see, this is where, you could get a question in the exam. So somebody who is a member, both members and chairperson. So after ceasing to be a member of the NFRA, he has taken up employment in an audit firm or whatever. He can do so after 2 years, but within 2 years from the ceasing to hold, he cannot. So dates become important. No. Notwithstanding anything contained in any other law for the time being in force. So the main law that's concerned here is the Chartered Accountants Act, 1949. So notwithstanding that, the NFRA shall have the power to investigate into matters of professional or rather misconduct committed by any member of a firm of chartered accountants registered under the Chartered Accountants Act 1949. Right. Now, so the NFRA may do it suo motu, on its own motion, or on a reference made to it by the central government. So where the central government during the course of an investigation or through some other means comes to know that the auditor of a company has colluded or has been negligent, then such matters can be referred to NFRA, provided, very, very important, the company concerned should come within the jurisdiction of the NFRA. So that is something you might want to remember. Later on, when you come to auditing also, you'll see only certain categories of companies are subject to rotation, where the audit firms are, where rotation, the auditors have to be rotated. Not all. So you need to know this, which companies are subject to rotation, which companies are, where the NFRA has initiated an investigation. No other institute or body shall initiate or continue proceedings on this matter. I think this is a very interesting and important area where those companies that come under the jurisdiction of the NFRA will investigate. ICAI cannot do this. I mean, I'm not questioning this. I'm merely observing it. I'm merely showing it to you. Okay. If any person is ceases to be chairperson in 2020. Yeah. See, again, if you say 2020, you date to date. So you can't say 2020. For example, suppose he resigned on February 2020. Whatever. February 18th. Then 1 year, 2 years from that date, na? So, like that. So I would prefer not to use years here. Go for a date. So from that date, 2 years. 2 years means if it's 18th of February 2020, then 17th of February 2023. That is 2 years. After that, he can. I would prefer to use dates there rather than blindly 2020, 2020. Supreme Court, I think, Kuldeep ji, Supreme Court is not part of the executive. See, Supreme Court is a judicial body. First of all, the Supreme Court has nothing to do with this matter. Okay. Our constitution divides the government into 3 parts. The legislature, which is the parliament, the lawmakers, right? Then the executive, which is the most powerful, under which NFRA comes under the executive function. Okay. It comes under the ministry now. The authority comes under the Ministry of Corporate Affairs. So that way NFRA is a part of the executive function, whereas Supreme Court is part of judicial function. Please understand the difference. Okay. Not even the tribunal, which comes technically within the MCAA, is a quasi-judicial part. It is judicial. What is the meaning of judicial? When the executive does something which hurts you or which harms you or against which you are not agreeing, then there is need for an appellate authority. Now, so the tribunal is an appellate authority. In the same way, the Supreme Court is the ultimate appellate authority. So when the executive does something that you are not happy with, again, where will you file that complaint? Where you go on a writ to the High Court. Okay. And in some cases, you go on a writ to the Supreme Court. Right. So the Supreme Court power is different. So don't confuse Supreme Court here. You should rather be worried that the institute has lost its right to, discipline its own members. I'm more worried about that. Okay. And Supreme Court, please don't give. Forget Supreme Court. Supreme Court doesn't have time for all this. See, Supreme Court on its own will do nothing. You want to move the Supreme Court, there are many methods. Either you go on our original writ petition against the executive. See, suppose you feel that the NFRA is that way part of executive. Okay. So, and the orders of NFRA are appealable. So, where the appeal is there, you can go on appeal. Yeah. Appellate authorities are there. So many things are there. You can't just like that. Supreme Court is way up there. I think because you think Supreme Court means everything Supreme Court. No. So you can approach the Supreme Court only as the last resort. There is ultimate appellate authority there. Okay. Just like that, they won't come and poke their nose here. So Satyam scam and all, Supreme Court won't come. Don't worry. The jurisdictional High Court is there. The jurisdictional magistrate court is there. That fellow will be the first guy handling this. The Ramalinga Raju complaint will go to the jurisdictional magistrate. Please understand. You don't even go to High Court. It is basically economic offense, yeah. Cheating. For that, CPC is very clear. There's no need to go to Supreme Court for that. Now, within this framework, the NFRA is part of the executive. It comes under the Ministry of Capital Affairs. Okay. So the ministry has the power to review and all. That power, they have given it to an authority, which is now. Okay. So, I think you are clear now, Kunalji. See, depth of subject is needed. Huh? So don't think Supreme Court means something. There are so many judicial authorities within that framework. First of all, you should know to which authority you have to go. In case you are, see, for example, suppose, no, your question is very good. And I'm making this point. See, you as a chartered accountant, many of us don't know. We have certain legal remedies in there. We think that within the framework of the Income Tax Act, within the framework of the Companies Act, there are appellate authorities. But when the executive denies you the basic principles of natural justice, or especially reasonable opportunity, etc., you have another right. There you can go to the jurisdictional high court on a writ. Are you able to understand? So in those cases, you can go on a writ. Okay. Writ petitions are possible, but that's about it. And that too not to Supreme Court, yeah. Go to the jurisdictional high court. Okay. Why go to Supreme Court for that? Because 2 states should be involved. Multiple states should be involved. Central government should be involved. Then you go to Supreme Court. Okay. If it is just government of Gujarat, then you can't go to Supreme Court. Gujarat High Court is there. Go there first. The chief secretary will appear. Then, if you are not happy with the Gujarat High Court's decision, yes, on appeal. Like that, there are many rules are there. I mean, that's not for you to know. That's why lawyers are there. But there was a time when a chartered accountant with, say, 10 years experience was well familiar with legal process. It wasn't as if he was blind. Especially those of you who want to specialize in taxation, which is a good specialization, incidentally, even today. Specialize in taxation, you need to learn legal principles. You need to learn. They don't understand. If you think income tax is just knowing tax law, no. You need to know CPC. You need to know constitutional law, especially constitutional law. Writ jurisdiction. You need to be very thorough on the writ jurisdiction. What writ will lie, whether it will lie at all in this case, etc. etc. Take some time off. As you come to final, maybe they will include it in direct taxes somewhere. When they come to appeals, you will find appeal to High Court is there. On a question of fact, you cannot appeal to the High Court. Tribunal is the last judicial authority for facts. Okay, whether the expense was actually incurred or not, whether the proof is available, whether the claim is warranted, whether the supporting is there or not. That's a tribunal is the last. In the question of law, yes, you can go higher against the appeal against the order of the tribunal only on a question of law. Okay. You can't. Fact, tribunal is the last. Nothing more. Like that, many things are there. Check it out. Huh? So since suddenly out of the blue you put Supreme Court, I want you to pedal down and learn the hierarchy before it. Okay. Okay. Now, I'm happy for this question and I hope I have not exceeded my limit in giving you all these elaborate answers, but be careful. Sir, today we have to be very careful about our constitutional rights, sir. The country we have reached a stage in this country where, my constitutional rights become very important for me. I have to protect myself. Okay. Earlier, I used to rely on the appellate authorities and their, prudence and their prescience and their knowledge. Today, no. Appellate authorities have problem. Faceless appeals are there. Faceless and baseless sometimes also. In those cases, what do we do? Faceless assessments. Baseless. Now, I have myself gone to the High Court many times, where the case involves 300 crores, 400 crores. I cannot afford to go on appeal, pay 20%, yeah. And it's a gross miscarriage of justice where so much facts have been presented, where so much documentation is given, fellow doesn't look at it, blindly passes an order, Testing it on appeal comes later. You have ignored all the things I have given. Not even considered it in your order. The order will be quashed, and the officer will be asked to redo the order again. Of course, that will not be the end of it. Redo it, taking into account all the information given by the procedure. So, like that, you have to be very, very. Think you might say, "Sir, don't waste my time. I'm going to join a large company. I'm going to become a finance guy. I'm going to be a CFO, etc., etc." Sir, more than you need to know, because for a large multinational company or a large multi-crore corporation, if an order is coming now, it won't be 1 or 2 rupees. It will be hundreds of crores. That's what I'm saying, 300 crores. You might have a professional like me advising you, but it's necessary for you to be familiar with the legal framework. So when I am telling you, let's go on a writ, you should know where I'm going to go for a writ. Okay. You should know that I'll be going to the Gujarat High Court and not to the Supreme Court. Okay. Yeah, good. Now, so the real concern here for me is NFRA gets the right to view discipline, take disciplinary action. Okay. Now, in this sense, since it has the power to investigate and hear, it becomes a quasi-judicial body. You might say, all this elaborate thing this fellow is giving, I don't need all this. Am I going to become an advocate? No. But you have to become 1/4 advocate. Be prepared to become 1/4 advocate. I mean, unless, say, even if you are in core finance, boss, somewhere you will have to meet the law. Okay, you will have to meet somewhere. Okay, you will have to your roads will cross when you will have to meet an advocate or a tax practitioner like me. Okay, so the NFRA is a QJB. It's a quasi-judicial body. See, civil courts come under the Code of Civil Procedure 1908. They are directly bound by it. But other judicial bodies, like the tribunal, the National Company Law Tribunal is one obvious example here. The Income Tax Appellate Tribunal, right? The Competition Commission. These are all quasi-judicial bodies. We use the word quasi. I'm sure you're already familiar with the word quasi. Quasi means false or like, but not the same. Quasi contract. Like a contract. It has all the features of a court, but it is not a court under the CPC. So, a quasi-judicial body is vested with certain powers which are normally available to a civil court under the CPC. It is not a civil court. It is not bound strictly by CPC. In fact, quasi-judicial bodies can form their own procedure. For example, the tribunal has evolved elaborate procedure and the rules and regulations are there. Okay. Similarly, NFRA also will evolve its own. But while trying a suit, the court has certain powers. The same powers are vested with the NFRA when it is hearing. Okay. Not only that, once you say it is a quasi-judicial body, it is bound by the principles of natural justice. It's a very important point. In fact, many times while addressing the income tax officers during hearings, at a certain point in time after I given, say, a 25-page written submission and he has read through it and he is still not convinced, I remind him, Sir, you are sitting in a quasi-judicial role. Then he look at me, what do you mean? Sir, you are a court. Okay, I have presented my case. No, a court cannot have a bias. You have to sit in judgment. You are not part of the department now. In this role, you are not only a department man. You are my man also. In the sense that you are a judge. Be fair. In fact, once they make this quasi-judicial argument, they will smile because they will know that they do have that discretionary power where if they feel that they can. Okay. So just a point. So every income tax officer while assessment under 143.3 or 147 read with 148, it's a quasi-judicial authority. Okay. He has these powers. Same way, the NFRA has these powers like discovery and production of books of account and other documents at such place and at such time as may be specified by the NFRA. See, the word discovery has, in jurisprudence, it has a totally different meaning also. Means, see, any document that is available to the department should be available to me. Any document on which they are relying should be made available to me. Nothing is secret anymore. During the course of the investigation proceeding, yes, investigation is over. Now you come for assessment. And you are saying that based on a statement made by my client, you are going to do this. Agreed. I'm not questioning you. I'm saying, what was that statement? Give it to me. I am entitled to a copy of that. Okay, that is called discovery. Everything that you have, and similarly, whatever I have, I'll give it to you. Every document that I have, I'll give it to you. Based on that, we can. So, these are extremely legal points I'm making here. Try to understand it. The word discovery and production has meaning like that. So, everything that one party has should be made available to the other party. And that party should be given enough opportunity to read it, take it into account, and make submission again. So, this opportunity should be given. Summoning and enforcing the attendance of persons and examining them on oath. Okay. Inspection of any books, registers, and other documents of any person referred to in this. See, in fact, recently in one case, we have said, so you are relying on so-and-so statement for doing this. I want an opportunity to cross-examine him, produce him before, cross-examine him. These rights are available to you, sir. Take it, keep it in your mind somewhere that, see, sometimes, this type of information is shared only by seniors to newcomers into the profession in this manner. So those of you who are very keen on getting into tax practice, remember this. You are a quasi-lawyer. If you want to become a tax practitioner, if you want to become a tax expert within courts, you have to become a quasi-lawyer. Like a lawyer, but not a lawyer, but you should behave like a lawyer. Okay. Right? Because you are appearing before quasi-judicial body, member of the Institute of Chartered Accountants of India is entitled to appear before National Company Law Tribunal. I'm not joking. You don't have to be an advocate. Of course, you are entitled to appear up to Income Tax Appellate Tribunal. Just tribunal, you can appear. Okay, you are entitled to appear. Your membership to this institute is enough. Okay, except that there is a dress code and all, you have to maintain that. Certain way of addressing the bench, you have to be. That's about it. Okay. So, inspection of any books, registers, and other documents of any person, issuing commissions for examination. In case the witness is not able to come in person, the NFRA can send an officer to, take a commission and see the questions will be put, and based on that, the person will give a reply that will be documented, and so this is called commission. Okay, the person doing it is called commissioner of oath. He will go and he will, usually in CPC, this can be done only by an advocate. An advocate in the court will be sent by the court to do this. But in case of NFRA, it will be an officer of the NFRA who will do this. So this particular section, you will find it repeated again and again. Whenever a quasi-judicial body is involved, you will find this section is repeated. Okay. Now, very stiff. You might want to remember this. In case professional or other misconduct is proved, okay, NFRA shall have the power to make order. In case of individuals, 1 lakh minimum up to 5 times the fees received. So if you charged 1 crore, then up to 5 crores. In case it's a firm, then minimum 5 lakhs and up to 10 times. So if you charged 1 crore, then 10 crore is the penalty. Minimum 5 lakhs, up to 10 times the fees received. Also, they have the power to debar from being appointed as auditor or internal auditor or valuer for a minimum period of 6 months to a maximum period of 10 years. Of course, once NFRA passes this order, the institute also will follow suit and the certificate of practice will be cancelled for that period. Person will be not only debarred by NFRA, by the institute also. And for a minimum period of 6 months to a maximum period of 10 years debarring. Okay. So generally 10 years debarring, it happened even for Satyam, 10 years debarring. The institute independently will debar. Even if the court may acquit, the institute will debar. Because even if there is a suspicion, no, straight away the respectability is lost. So that's all. Now, please note this. Your Honors, this is very, very important. This is what I'm trying to tell you. See, orders of the NFRA are appealable orders. Mr. A is a chartered accountant. He has been, case was heard. Then he is not happy with the decision. He feels that many facts have not been considered by the NFRA and that it has passed a hasty order. He can go on appeal against it to the NCLAT, National Company Law Appellate Tribunal. Okay. So this is an appealable order. Be very careful because where appellate provisions are there, generally High Court and Supreme Court will not interfere. For example, NFRA has heard, passed an order. Immediately you rush to High Court and you say, NFRA has not. See, there you will say, they are a quasi-judicial body. They have not given me the reasonable opportunity. Principles of natural justice were violated, etc., etc. Therefore, quash the order. Now, one of the High Court will first say, hey, do you have a right to appeal? Yeah. Then go appeal to the National Company Appellate Tribunal. Let them hear. Come through the appellate process. After all, there's a body there. They have been appointed to hear the same matter. Let them hear. And the same subject, let them hear. Whatever you are telling me, tell them. After all, if there is no appellate remedy available to you, I can help you. Here is an appellate remedy readily available to you. Go. So, appeal against the order of NFRA, you can go before the NCL-80. Usually NCL-80, 60 days you have time. From the date of receipt of order, 60 days you can go on appeal against the order of the NFRA. Please put all your questions. After I finish this, I will take up all the questions in one shot. Very important. Very important. Which are the companies in respect of which NFRA may exercise its powers? Listed company, always there. Forget it. Any listed company will be there. Don't even think twice. Okay. Whether it is independent directors, whatever, CSR, whatever, you will find listed company is very much there. Okay, you cannot take them out. Then the remaining companies unlisted. I'm sorry, CSR listed company is not automatic. I'll come to that later. But most list, you will find listed companies are included. Rotation of auditors, listed company. Okay, listed company compulsory. Unlisted public company, then there is a financial or pecuniary limit. PUC, not pre-university certificate. It is paid up capital, PUC. PC, PUC. Paid up capital. The paid up capital greater than or equal to 500 crore. See, they use the word paid up capital. Your Honors, please note it. I may repeat it even ad nauseum, even irritating you to an extent. But because in the exam hall, you'll forget it. Whenever they say paid up capital, it includes preference capital also. Note it somewhere. If you noted it, note it once more. In the exam hall, they will give you a balance sheet. This could be in buyback. This could be anywhere. Okay. Where they will give you, or this could be dividend, declaration of dividend out of reserves, wherever. If they give you preference capital and equity, both have to be combined for paid up capital. Okay. So there are many situations where we see paid up capital. If net worth, while calculating net worth, you have to include paid up capital now, both preference and equity. Okay. Unless they have not told it anywhere in Companies Act 2013, to my knowledge, it is not there. Paid up equity capital, no. Okay, no. Throughout, it is only paid up capital, which means it includes the preference capital also. Please make a note of it somewhere in your yaad rakh dijiye, please. Because exam hall, you'll forget it. Don't let it happen. So paid up capital greater than or equal to 500 crore. Or, friends, though there is no or mentioned anywhere here, these are all or. Okay, this is an independent list. Listed company, right? Unlisted company. Here, there is a or turnover greater than or equal to 1,000 crore, or outstanding loans, debentures, and deposits greater than or equal to 500 crore. Even if one of these conditions is satisfied, okay. Now, very important, this should be seen as on 31st March in the previous financial year. So, whether AB Limited will come under NFRA, if the question arises today, on 22nd of October 2025, then I have to see the balance sheet as on 31st March 2025. Is the paid up capital greater than or equal to 500 crore? Did the turnover cross 1,000 crore, equal to or 1,000, greater than 1,000? Or liability side, loan, debenture, and deposits total, is it more than 500 crore or equal to 500 crore or more? Then this company comes under the purview of NFRA. Okay. Insurance companies, banking companies, companies engaged in generation and supply of electricity, they come under this. Bodies corporate or companies referred by CG to NFRA in public interest. The word bodies corporate is wide. It includes LLP also. Please remember, whenever the word body corporate is included, it includes LLP. Also, it includes companies incorporated outside India. You already know that, so I don't want to waste your time. Body corporate is a wider term. It includes company incorporated outside India. Definitely, it includes LLP also. Okay. Because the definition of body corporate is not an exhaustive definition. It is only inclusive. They say bodies corporate includes companies incorporated outside India and does not include trade union, etc. Okay. That's all. So it doesn't mean that other bodies corporate are not. LLP is a body corporate. So it is part of definition of body corporate. Okay. Bodies corporate registered outside India, okay, which are subsidiary and associate of A to D, subject to certain conditions. What they are, we'll see in the next slide. So, companies incorporated outside India, bodies corporate incorporated registered outside India, whatever they may be, which are subsidiary or associate of A to D. Okay. So, a listed company has a foreign subsidiary. That will also come under NFRA. Okay. Now, sir, when can NFRA, which is the Indian authority, how it can get jurisdiction over a foreign company incorporated outside India? There should be a connection with India now. So any one of these company or body corporate referred to in A to D may have a subsidiary or associate company, which is a body corporate registered outside India. Now, because it is my subsidiary, because I'm associate, it comes under the net. But before NFRA can exercise its jurisdiction, it should show that income or net worth of such subsidiary or associate company exceeds 20% of the consolidated income or consolidated net worth of such company or body company. So what you need to do is, you need to take the total net worth, the Indian company and also the foreign subsidiary, total. Then calculate 20% of that and see whether the net worth of the subsidiary is more than that. Okay. Same way for turnover also. Income also. The income or net worth of such subsidiary. The word income is used, the net income. So you take the total income and then see whether the income of the subsidiary will be more than 20% of the total consolidated income. Only then the subsidiary or associate will come under the jurisdiction of NFRA. Right. So let me see if you have any quick questions which need to be answered, and then I will. Yeah, there are many things. Just joking. Thank you. Even I was also joking only. This session is live. I don't know what is the nature of the question. This session is live. You can ask questions. Since you have asked a question and I have replied it, Mr. Deepak, it is live. So the NFRA has the duty of reporting, recommending accounting standards and auditing standards. So basically, NFRA cannot conceive it. There's a process which the ICAI has. And every member of the institute has the right. Because every one of us has the right to comment about the accounting standards and auditing standards. Because they're meant to govern us, meant for us. Okay. But still, since they are also going to now be binding on, especially the accounting standards are going to be binding on the corporates, they are recommended by NFRA, right? So ICAI recommends it, and then NFRA recommends it to the central government. Okay. So in this process, NFRA can also seek additional information, etc., etc. Right? This is for the company. If a company or any officer of the company or an auditor or any other person contravenes any of the provisions of NFRA rules, the company and every officer of the company who is in default or the auditor shall be punishable as per the provisions of section 450. See, 450 is not in your syllabus. Basically, where in this law no penalty is prescribed, where a section doesn't, where there is a compliance requirement, but the chapter or section does not prescribe a penalty, 450 will apply. Okay, 450 is the provision where no specific penalty or punishment is provided. See, Companies Act has so many compliances, so many requirements. Now, non-compliance is definitely an offense. No, but then that chapter or that section may not provide for any punishment. So no punishment? No. In case there is a compliance or something should not be done or something should be done, either way, and no penalty is prescribed specifically for that, then 450 will apply. 450 is the omnibus section. Please remember that. It's not in your syllabus, but it's referred here. So company and every officer shall pay a fine up to 10,000 rupees. And if it's a continuing offense, 1,000 rupees for every day after the first, during which the contravention continues. Okay, so this is the general rule for offenses. In case no penalty is prescribed in the section, right? So this NFRA is similar to the IEPF authority. okay, Investor Education and Protection Fund Authority. It will meet at various places. They'll have a secretary to, sort of coordinate everything, call the meetings and all that. And head office is in New Delhi, but it can meet in other places also. The accounts of NFRA, just like the IEPF authority, are audited by the CAG. And along with this, the audited accounts, an audit report will be given by CAG, and this will be forwarded by NFRA to the central government. Also, the NFRA will prepare see, this is similar to IEPF authority. Do you remember? When we saw IEPF authority, we saw similar. So auditing by CAG, audit report will be given. Then the authority will prepare an annual report. The report, everything will be sent to the central government. Finally, the said annual report, together with the audited report and CAG's audit report, will be placed by central government before both the houses of parliament, thereby making it a public document. It's a public document. Every citizen of the country is deemed to be aware of it because our representatives have come to know about it. You and I are deemed to be aware, but under you are entitled now. It's part of the proceeding of the parliament, and as such, a public document available to every citizen. So we have seen 132, right, which is NFRA section. We finished 132. Now we are moving to 133, which empowers the central government to prescribe accounting standards. See, accounting standards are mandatory. We already saw that. 129 itself says you have to comply with accounting standards. Who prescribes? The ICAI cannot prescribe for the board of directors. I have no jurisdiction. We have no jurisdiction. Central government prescribes. Till such time NFRA is constituted, okay, the accounting standards are recommended by ICAI and examined by NFRA, okay, and then recommended by NFRA to the settlement. Till such time NFRA is constituted, till such time it is not constituted, there's a recommendation by ICAI, and there was an NASB, National Advisory Committee on, NACAS. NASB is our body. We have an ASB, Accounting Standard Board. The NACAS was there before NFRA, National Advisory Committee on Accounting. See, this was basically an advisory committee on AS. Because remember, mandatory accounting standard is not 2013 invention. It was there in the old law itself. The 56th law also made it mandatory. It was accounting standards were mandatory and binding on the board of directors, right? So at the time, NACAS was there, and ICAI recommended, and it was examined to NACAS, and then said, go ahead. So central government will notify. Now it's slightly tighter now, and NFRA scrutinizes the process, and then it recommends, okay, to the central government. Then central government notifies under section 133. Once it is notified, it becomes binding on the companies and the directors, company secretary, everybody, in all the KMPs, etc. Now, before we go to CSR, which is very important, let me take some multiple choice questions and check if we have internalized this well before we get into CSR. Right? So, as usual, I will put the question there and wait for your answers. Actually, it should be NFRA was constituted in. Good show, yeah. I'm sure all of you are very clear about the answer. Yes. In fact, Mr. Mustafa has looked it up and he comes out with the clear date, 1st October 2018. Good show. That's right. Fantastic. You got it right. Absolutely. See, other three topics, there no cost audit, it's directly handled by the ministry. We'll be seeing that when you come to auditing, cost auditor is appointed in consultation by the board in consultation with the ministry directly from a panel. Okay. Corporate governance, as such, there is no body. See, MCA is not the only body. Okay. SEBI also has a role. MCA has a role. This stock exchange has a role. It's a framework. It's a very complicated framework put in place. It's a topic by itself. Maximum penalty NFRA can impose on a firm. My God, sleepless nights, no? When you think of the amount, better to take professional liability insurance. Most large firms pay huge premium for professional liability. See, ICMA, actually it is not ICMA. If you're talking about the ICAI, that is the Institute of Cost Accountants of India, they are also ICAI. They give the qualification of CMA. More about it when we come to cost audit. But ICMA has no role to play in appointment of cost auditors. It is central government that does it. P, 5 lakhs. Ladies and gentlemen, will note the question. I have a variety of answers here. So happy. Yeah. A, B, and C all are preferred answers. Yeah. 1 lakh is for an individual. Okay. 10 times. Maximum penalty. Minimum is 5 lakhs. Maximum 10 times of audit fees. Try to remember. Yes, sir. Absolutely correct, Mr. Deepak. Yeah. So 10 times of audit fees. Very high. But then benefits are also there now, obviously. So it's more like a disgorgement. But you see, when somebody guilty is punished, it's okay. But somebody innocent shouldn't get caught in this and be destroyed in the juggernaut of NFRA. That's something weird. Of course, there is sufficient. See, luckily for us, we are a democracy now. As of today, we are the largest functioning democracy in the world. And when you say democracy, it's not only the election process. The election process is only one aspect of a democracy now. Okay? The other aspects are also there. Freedom of speech. Okay? Right to approach the judiciary when the executive is malfunctioning. These are inalienable rights. It's only when these rights are removed that we cease to be a democracy. That when an executive says, you have no judicial remedy, if I kill you, you have to die, then we are no longer a democracy. Executive should always be under the scrutiny of the judicial review, right? Anilji, MCA is the ministry. That ministry has set up a specialized body called NFRA. Okay, for the purposes aforementioned. Okay, so it is not as if MCA is different from NFRA. It's MC. See, instead of the ministry taking the power, they have given it to the NFRA. Okay, and the authority has been formed. I hope I'm communicating this to you. See, it's like asking, sir, what is the difference between the income tax department and the Ministry of Finance? This income tax department is a specialized body with specific powers formed by the Ministry of Finance only now. It's a department. Like that, NFRA is an authority within the MCA framework only, the Ministry of Corporate Affairs framework. Okay, so clear roles. NFRA's role is specialized. MCA cannot interfere there. Okay. Nobody can interfere. Okay. For these functions, it's only NFRA. MCA cannot. But basically, this is something that the ministry could have done itself. It could have formed a committee. Instead, it formed the authority. Okay. And to give it more transparency and accountability, they made a NFRA. So I hope I will clarify. Exactly. It's a delegated power. The MCA has, these powers are available to the MCA. Instead of directly doing it, they formed a thing. Main purpose of NFRA is transparency, so that NFRA becomes accountable for its activities, which is why the annual report of the NFRA is a published document. It goes before both the houses of parliament, right? There's no secrecy there. Whereas many internal documents of the Ministry of Corporate Affairs are confidential documents. National interest, they cannot be given. Even under the RTA, you cannot. Though under RTA, 95% of those documents are capable of being revealed. Nothing is a secret in a democratic country. But it's still national interest is there. I don't want to give a separate lecture on RTA, but national interest, security of the country, if you're able to show, then that need not be given. Other than that, a citizen of the country has every right to receive the information that he wants. Okay. Sir, I'm not aware of the recent ICAI versus NFRA case. Sir, I cannot comment about it, sir. Mr. Deepak, there is, first of all, my view has no relevance here. I'm a member of the institute. I have my rule. NFRA is a lawfully formed body. It has been, we already saw the functions. If you've been listening carefully to my lecture, you will know what are the powers of NFRA. And very clearly, jurisdiction has been prescribed. Which companies come under NFRA also have been clearly prescribed. And once NFRA is there, so there is no overlap at all. Very clearly, they are saying if it comes under NFRA, it doesn't come under the ICAI. Straight away. So there's no overlap here. It's not as if very clearly they put it. I read it now. Nothing, notwithstanding anything contained in any other law. No proceeding can be initiated or continued once it comes under NFRA. Okay, NFRA has only got. So my views are irrelevant here, and but I think we bought it on ourselves, man. That's all. In one word, I'll tell you, our own one man's greed. It brought it on because we were always suspected. See, this is something that you will face as a practicing member. You will constantly face this negativity from government departments. Not only the Ministry of Corporate Affairs, the IT department also, GST also. Wherever we go, they see as some kind of, see the chartered accountant is here to help the client. Yeah, there I am. The way the lawyer is here to help the client, I'm here to help my client. But the underlying assumption is that illegally, immorally, unethically, that I don't agree. I have to fight for my client, tooth and nail, but ethically. Okay, ethically. So that is where the issue comes. So the presumption is that we are all guilty. And have to every time, like Sita Devi, we have to fall in the fire and prove our innocence and come out. We are every time Agni Pariksha. We have to go through it and come out. We have to prove ourselves and come out. Nothing wrong. Every member of this institute is ready to undergo Agni Pariksha every time. We have no problem because the entire framework of a practicing chartered accountant, the entire thing is based on reputation, sir. My reputation is what gets me clients. My expertise retains them. My expertise gives me the right to charge a premium. But if my ethical framework is not known, I don't think the quality of my clientele will be good. Okay. So I think I'm more worried about being ethical and being seen as ethical than anything else. Okay. This is my view, not necessarily the view of the others. But my view, very strong view as a member of the institute is that ethics is important. Personal ethics is very, very important professionally. Okay. Personally, you are boss. You may be, see, don't confuse morality with ethics. Man may be immoral, but he will not be unethical. Please understand. Don't confuse morality with ethics. Sir, that every day he is going to the bar, sir, drinking, sir, immoral, or maybe I will not judge him. But ethicality is different. Not doing something that is prohibited or that is against the law. Okay. Take it from me. No compromise, please. No way. If you compromise, it will be a danger. If not today, tomorrow, day after tomorrow. Initially, it might be comfortable to do this type of things, earn money. After some time, that will become a double-edged sword. With you, when you cut somebody, the same sword will come to cut you. So don't do it. Even if there is a iota of benefit from unethical behavior, don't even go there. It's my humble suggestion to you. If so, then who can frighten you? Nobody can frighten you, whether it is NFRA or whether it is ICAI, whoever it is. When you are ethical, who can frighten you? You stand up before them and you prove yourself and come. The one thing is, again, it is not enough if you have done it. You should prove it by documentation. That is the problem. Many members, they would have asked the questions, but they're not documented. Document it. Document it. Keep it ready. Whenever called, you say, look here, I want him. I qualified. This is how the opinion was formed, etc. You are clean. Or worst case, I recused myself and I have resigned from one or two cases. In the last 10 years, I have resigned from 3 companies as an auditor because I said, look here, I can't sign this. No, sir, Mr. A is willing to sign. Okay. A is willing to sign, not my problem. I am not going to sign. I resign. Minimum what I can do, I will resign. But while resigning, clearly I give the reason and I resign. No way I'll resign, just like that and I will. Okay. So that is, sorry for going into this, but see, since we are talking about NFRA and you are all potential members of this institute who will be in the attest and audit and attest function, some of you at least will be in audit and attest going forward. I'm giving these words of suggestion to you as a senior member of this profession. Mr. Anil, I tell you, 1 lakh people are doing fraud in this country. 1 million people are doing fraud in this country. I have 600 clients. They don't do fraud in it. That's all. I won't take a fraud. You got my point, nah? Let there be fraud. Let somebody else do it. Let them get caught. Just because others are doing fraud doesn't justify. Yes, sir. Everybody is fraudulent in this country, sir. Luckily for me, I have 600 clients who are not. I choose. And the minute the guy goes one step out, I throw him out. That's the end of it. Okay, this may sound very arrogant, but that's how it is. Okay, please. Today, senior member, I'm telling, 1991, starting date, my threshold was very clear. I will not take a client if this happens. So my growth was slow, but once it happened now, solid. So another person is doing, let him do it. If even Ambani is, let him do it. Don't. You be honest. You be ethical. That is my humble submission to you. Okay, thank you for your understanding and not giving this specious argument. Without doing fraud, how it is possible to survive? No, it is possible. There's no need for all that. You can earn a lot of money very ethically in this country. India is really doing well. And there are a lot of SMEs, a lot of growth-oriented companies want to be compliant. They need a good chartered accountant, a good advisor, put them on the path of compliance. Why can't we perform that role to them rather than, always imagine that, our premium is coming only by cheating, by telling him methods to avoid tax? No. Yeah. Advise him on taxation. Give him the best. But you have no obligation to reduce his tax. You are under no obligation to prove your worth by reducing his tax. If that is how he is judging you, he is not a good client. If his only way of yardstick is how much tax you can help me to avoid, he is not a good client in the long run. I mean, this is a humble submission from a senior brother. Don't take me otherwise. Okay, enough. Minimum debarment period, minimum NFRA can impose on an auditor, minimum debarment. Though I hope you remember. Correct. Their minimum you are clear. I'll quickly. 6 months. Good. See, remember, if there is a criminal fact involved, suppose there is a fraud involved, even NFRA cannot handle it. Institute cannot handle it, NFRA cannot handle it. Matter will go to the jurisdiction, the prosecution will be launched against the complaint will be given to the police station. And the jurisdictional magistrate will take over. The court will take over. Thereafter, nobody can, it's a separate criminal proceeding that will happen separately. In case there is a fraud involved. See, there could be professional negligence causing loss without intention to defraud. But suppose there is a collusive fraud where the auditor is also colluded, then that's a criminal case also. In addition to a disciplinary case, there is a criminal case also. See, this is part of auditing, but still, accounting standards are prescribed by, I think I won't waste your time on this. Not ICAI. SEBI has nothing to do with accounting standards. RBI possibly is aware that there is some accounting standard. So it is central government in consultation with NFRA. It's the word. Signing of financial statements. We already saw this now. Chairman or 2 directors. Also, if there is an MD, CEO, CFO, CS. This question comes regularly in the exam. 3 times they have asked it. Okay. So, if the chairman, if authorized by the board, if there is no chairman, then 2 directors, one of whom shall be the MD if the MD is there. In addition to that, if a CEO is there, CEO should sign. If CFO is there, CFO should sign. And our friend, the company secretary, should sign. $21. Yeah, 22, I think I gave the answer, so there is no point, but I want to reinforce. You're all correct. 22 is B. Sorry, there are 40 questions. Suddenly it jumped. 1 second. Now, coming back to the topic, what I will do is, time now is about 7:25. Okay. Now, let me take a small break. Mr. Amit Biswas on query pad. No problem. So, small break, sir. 5 minutes. Yeah. In the meantime, 20 and 21 somebody wants. I will keep it on the screen. Next, I will show 21 also. We'll come after a small break. welcome back from your short break. So somebody wanted 20 and 21. So 21, 20 I've shown. 21 is the accounting standards are prescribed by central government in consultation with the NFRA. NFRA gets its input from ICAI. ICAI's role is we feed the NFRA, and the NFRA, after taking guideline, after asking us, they will finally, give it to the central government, which in turn notifies it. Okay, is the point. Two signs also we have seen. Very important. I explained it. Unaudited accounts cannot be circulated to members, sir. No. Within the framework of the Companies Act, there is no question of unaudited accounts. It has to be audited and then only goes to members. If you circulate any unaudited accounts, it is not compliance with the law and it cannot be done. Okay? No question of unaudited accounts. Right? No is the correct answer. Okay? Yeah. I'm sure all of you are giving me the right answer, which is the correct answer. All of the above. All. If you check out, there is a slide there. See, this PowerPoint slide is already shared, and I'm sure it is there in the portal. So kindly download it and have a look. So all of the above is the correct answer. With this, let us sort of come back again. Now let's go to another exciting topic, which is there. Yes. D is the correct answer. CSR, corporate social responsibility. See, today, as I'm talking to you, another buzzword. I use the buzzword. Everybody is talking about it. It's the topic of everybody. Today, no conference is there without this ESG coming up. At least it will be one session, or the title, the theme itself will be ESG, or definitely one half a day will be ESG. Okay, so just give me 1 minute here. So ESG, can anybody tell me what is the expansion for ESG? Quickly. I'm sure many of you are quite familiar with the current trends. So ESG, most large firms are having specialized departments specializing in ESG. This is linked with CSR, don't worry. At least one is linked. Okay. ESG is, let's see if anybody has got it. Correct. Linga gives the correct. Environment, sustainability, governance. So environment and sustainability are part and parcel of corporate social responsibility. What is corporate social responsibility? Now, see, first of all, before we enter this, let me clarify my position. I am a pure capitalist. It's very difficult to understand. Some of you who feel socialism is great, remember, I'm not against socialism, but there is nothing called a free lunch. Pure capitalists believe that there is nothing called a free lunch. Nothing can be given free. Everything has a cost attached to it. Okay. Socialism has a cost attached to it. If you want to give benefit, somebody has to pay. Now, who pays how? That's all. Now, in pure capitalism, everybody fends for himself. Everybody's job to perform top so that we all maximum effective utilization of the resources, economic resources. So Adam Smith, okay, that level capitalism, okay, not wealth of nation capitalism, okay, not crony capitalism, not politically driven capitalism. No, this is pure capitalism, Ayn Rand capitalism, okay, original capitalism. Now, when that is so, 100% you will find that I do not agree with the view that companies have to do social service. No. Companies must make profits and maximize shareholder wealth. That is their job. If they fail to do this, they fail. Period. Where a company fails to make profits and maximize shareholder wealth. So, don't you think that ESG and corporate governance, and CSR are diametrically opposite? Because when I do CSR, I get nothing in return. Then why would I do it at all? Okay, this is a larger question. I'm not answering it for you. But having said that, companies must make profits and maximize shareholder wealth. But this is not to say that this is their only goal. Okay. They owe a duty to serve the communities and society within which they exist, function, and derive the sustenance for their growth. Friends, CSR is not about charity. CSR is about making a positive influence on the communities and society surrounding the company. Because think about it. The company derives its sustenance. See, who are the customers? Society. Who are the laborers? Society. Who are the creditors, vendors? Society. Got it? So everything is, we are deriving from, of course, I'm paying everybody. I'm not taking a thing free from them. But still, okay, this is where it's a leap of faith that people like Jamshedji Tata made. See, when Tata set up his steel plant in Jamshedpur, in one of the remotest part of Bihar, okay, he decided to make that part of the country rich. Of course, he took the ore from the land, but he said, I will give it back to them. And he created Tata Nagar, which is a exemplary example of CSR. So much so that at one stage, Tata had an advertisement which said this. Those of you who can go back and see in Google, do it. One of famous advertisement of Tata was, we also make steel. We also make steel. What were they communicating? They said, look here, our core business is making steel. We make money out of it. Yes, but that's not the only thing we do. We also make steel, but we also develop the community. Anyway, the larger story of Tata Nagar and Tata, CSR, it's a bigger story. How they do it, it's a bigger story. But broadly, every company has to return back to society. If they fail to fulfill this duty, they will be no more than a cancer that destroys the very thing on which it feeds. So, giving back is not ruled out. But companies like Tata Group, company like Asim Premji, Wipro, they give. But not every company will give so freely. Some of them may be following my pure capitalistic model and saying, look here, I'm paying you all. I'm not cheating anybody. Okay, I don't have to do anything more. For them, it was fair. Hey, it's not fair, yeah. A small portion of your profit, you have to share with the community. So, for the first time in the history of corporate law, they brought compulsory CSR. Okay, so that is where this chapter is all about. Compulsory CSR. Voluntary CSR was already being done. Believe me, this was not invented by the Companies Act. As early as 1800s, Tata was doing it. Okay, late 1800s and early 1900s, early 20th century, Tata Group was pioneering CSR. Okay, building hospitals, building schools, right? And others were also doing it. Okay, other corporate giants were also doing it. But compulsory. everybody should contribute, came through the 2013. So CSR is the conceptual framework. Okay, idea is to not to throw money, but to sow money. Okay, social welfare measures taken in and around the geographical area where the company operates. But be careful. The benefit from CSR should accrue to the public at large, and not only to those who depend on the company. So merely doing staff welfare, employee benefit, and claiming it as CSR won't work. Okay? So quickly, to see the legal framework, basically, the law relating to CSR says certain companies have to form a CSR committee. Certain companies have to form a CSR committee. The CSR committee will be responsible for spearheading the corporate social responsibility. Who will be liable to contribute to CSR compulsorily? Those companies that have formed a CSR committee have to contribute to CSR. Based on how do I then decide who has to? Based on net worth, turnover, or net profit. Okay, we'll see this. Before that, quickly, very clearly they say these are not CSR. Better be clear. These are not CSR. Any activity which is undertaken in the normal course of business, not CSR. For example, a pharmaceutical company has to do R&D, sir. The R&D may result in some beneficial drug being discovered. Sorry, sir, that is your business. The only exception was companies which are engaged in developing vaccine for COVID-19. Now, was COVID over and gone? Then please, COVID over and gone. Okay, forget COVID, forget all that. Okay, this is all over. Now, at that time, this was there, 2020. Now we are in 25, 26. The original normal, then new normal, then back to original normal. New normal was very short time. The new normal, so-called within quotes, new normal. Now we are back to original normal. Okay, or new normal, whatever you call it. When keep on. There is no normal. That is the first learning you have to get. Okay, there is no normal, new, old, no normal. Every day is a new challenge. Okay, to the new era will bring a new challenge every day. If you say this is normal, you are gone. That is where the COVID time also the people made a mistake. They called it new normal. That is where, for a person for whom there is no normal, COVID doesn't surprise him. When you say I have no normal, everything I'm ready, COVID doesn't surprise. Rain doesn't surprise. Okay, just because there are 10 clouds are there in the sky, everybody will send WhatsApp message. Be careful today. Going to be a big thing like that. As if Varsha Ritu, this is the time when rain will come to this part of the world. Geography. If it doesn't come only, we have to worry. Okay, so suddenly they will say it's going to rain, as if world has not seen rain. 200 years before this rain was there, 200 years after this also rain will be there. Rain is clear. Only we are getting confused. Okay, so I'm just giving you today's. Suddenly, one everywhere WhatsApp message will go. Then from Bombay, somebody will call. Srikanth, I hope Chennai rains are there. Sir, no rains are shining, sun shining here and we are regularly. No, I saw huge flood. Lakes are all overflowing. Hey, boss, that is your call. To get frightened is your call. Okay, to live a free life is my call. Okay. No. So please don't waste your time reading WhatsApp and all. Yeah. Live your life. Go out and see out of the window. And that is the weather. The weatherman need not tell the weather. You have eyes, you have ears, you go see the weather and do what the weather tells you. Okay. No. So I am sorry for this, but sometimes in the COVID period, I was shocked and surprised by the type of fear that people are having. They were running around headless chicken, not knowing what to do, doing anything and everything under the sun. What to do. Anyway, so any research for that purpose alone, they said you do it all. Okay. So fundamental point, if it is part of your normal business activity, it is not CSR. So this, since the COVID pandemic is now out, I am not covering this. Okay. COVID pandemic is now not there. Therefore, this is not important. But this is important. Any activity which is undertaken in pursuance of normal course of business is not CSR. Very important. Any activity taken outside India, not CSR. Okay, any activity done outside India, not CSR. Contribution to political party, not CSR. But don't worry, there is a beautiful section. You can give any amount you want to political party. There is no limit. Okay, right. Then activities benefiting employees, not CSR. Where it will give you marketing benefit, where it will give you brand advertisement. So please note, you are giving free notebooks and pen, paper, pen and pencil and all to school children, poor school children in corporation schools. Do not put your company logo on it. The minute you put your company logo, not CSR. Okay. Activities carried out for fulfillment of any other statutory obligation. For example, under the Factories Act, there should be a toilet for the employees. You put the toilet, that cannot become a CSR bus. Okay. Or even if there is some compulsory thing that you have to do for society, suppose pollution control equipment, that is not CSR bus. It is part of environmental law. You are complying with the law. Okay. You are not doing any benefit to society. You are complying with the law. Okay. Now, what is CSR? I will not waste your time reading it, except that almost everything is covered here. Okay. Eradicating hunger, promoting education, promoting gender equality. This is the menu. Everything is here. Whatever suits you, take it. Protection of national heritage. See, sustainability has come here. ESGS, environmental sustainability, ecological balance. You want to protect the starfish, go protect. Okay, you want to protect the Ridley turtle, go protect. CSR, your MD likes Ridley turtles, and he wants to go on Sundays and spend part of CSR. Okay, all of you guys want to go on a Sunday, go to the beach, protect the Ridley turtles. Welcome. Okay, protection of flora and fauna, animal welfare. One company came to me. Their doubt was under CSR, can you do Goshala? Animal welfare is covered in CSR. So Goshala covered. You can have a Goshala and protect cows. Those are also animals. So they come under animal welfare. And of course, while you are protecting cow, protect other animals also, along with cow. So almost everything is covered here. Okay. And if you don't know what to do with the CSR money, our enlightened Prime Minister readily available with the PM CARES Fund. Give it to him. He knows what to do with it. He will do it. He will spend it for you. Give it to him. I don't know what to do with CSR, sir. I have to spend. Don't worry. Give it to PM CARES Fund. That's all. Okay. That is the best thing. Give it to them. Be happy. Take the receipt and give it. I will come audit it. Clear you for CSR. Okay. Contribution for technology incubators, rural development, slum area development, disaster management, including relief, rehabilitation. I was 2 years ago, I was in Japan. I was visiting Hiroshima. Should see how Japanese have prepared themselves for earthquakes and volcano eruptions. So they have gone through a Holocaust in Hiroshima. Kobe, there was an earthquake. There's a place called Kobe. There's a heavy earthquake-prone area. So they have a place where they teach children, everybody, what to do in case of an earthquake, how to protect yourself. Anyway, so they see, if you want to serve the community, there are many, many ways of doing it. Okay. Now, so very important. Very, very important. Thank you. Some comments are there. I don't know about that. Lakshmi Devi Christ have donated and all. I won't go to that extent. Sorry. $10 is not fair. So, don't. Yeah. Sometimes you can give, which is why, just as a matter of interest, I'm telling you, the only thing I do, I have set up a foundation where all my, portion of my annual earnings goes into the fund. Okay. Percentage of my annual earnings goes into the foundation. And from that foundation, we select children who are coming from poorer, very poor, but meritorious, studying in engineering colleges, medical college, and we help them. So we fund them. For the entire 4 years of engineering, we pay the fee. The idea is this one guy completes or this one girl completes engineering, the whole family can grow. A whole society that they will push everybody up. So like that, we have helped about 50 to 60 people because see, if I select one person, I have to be with them for 4 years. So it's not like throwing 5,000 rupees to everybody. 50,000 rupees every year I have to pay for that person till he or she finishes engineering and gets a job. I'm with him or with her. So, and they have to maintain that 60% pass percentage, not much. They don't have to get first rank, 60%. So, my idea is sowing a seed rather than throwing the money. I sow the seed so that the tree grows and it gives fruit in turn rather than throw the money in, feeding the poor and all that. I'm not a great fan. Not a great fan. Not that that's also important. There, I feel Lakshmi will surely correct. Rather, this Lakshmi will be happy because we are sustaining one more generation. This is my view. Okay. Though there are views for each one, yeah. There are people supporting feeding the poor, people supporting medical relief, people supporting. So, whatever your interest, this menu is very wide. This they have given you enough freedom to move around and do it. Okay, from the exam point of view, very important. Every company having net worth of 500 crore or more, or turnover of rupees 1,000 crore or more, or net profit of rupees 5 crore. So 500 net worth, turnover 1,000, net profit 5 crore. Okay, so this is the or. So even if one criteria is satisfied, so when you should see during the immediately preceding financial year, Your Honor, so please note it, not during the year. You have to go to the balance sheet and P&L of the previous year. Got it? So the annual report, you have to see for the previous year. You have to see the net profit. Now, while calculating profit for CSR, you can take out profit arising from any overseas branch. Why? If you remember, if you do any CSR abroad, it is not counted as CSR, right? So since they are not giving you credit for doing work abroad, any profit from an overseas branch also, you can take it out, reduce it. Also, if your company is receiving dividend from some other companies which are covered under 135 and complying, then you need not. In the same group, yeah, you are having, say, subsidiary company where you are holding shares. Subsidiary is complying with CSR, then you need not. You have to, but for calculating the profit, you can ignore the dividend received from those companies. Okay. But still, you also have to do. If you are covered, you have to. But while calculating the profit, dividend received from companies that are covered under on the define complying with them, the provision, that dividend you remove it. Why? Because after CSR only the profit has been arrived now. So that is. So net worth definition, I don't want to waste your time. You are already familiar. Okay. Now this is a problem. RERA Limited, a company incorporated under the Companies Act 2013, having paid up share capital of INR 10 crore, turnover of INR 100 crore, net profit of INR 3 crore, and securities premium of INR 300 crore. Okay. So the CFO of the company informed the directors that the CSR committee is required to be constituted. Now the directors seek your advice as a professional. What do you say? Note it down somewhere. NW, like short form, NW greater than or equal to 500, TO greater than or equal to 1000, NP greater than or equal to 5, all crores. 5C, 500C, 1000C, 5C. Correct? So let us see here whether any answer is there. Net profit more than How do you get that, sir? Deepakji, how do you get more than 5 crore? Yeah, got it. Yeah. So the CFO should not have advised like that. Now, see, turnover 100 crore, profit is 3 crore, net worth is 313, means 10 crore paid up share capital, 3 crore profit, hai na? That is also there in P&L account. Na? That should be added. Maybe that is all 300 crore security premium, total 313. Is still not greater than 500. Correct. So, correct. Got it. Great. Wonderful, sir. Now, here is another example. Be careful. You have to see the figure as of the last audited financial statement. Okay. So, as per the last audited financial statement, net worth 100, turnover 500, but it has become 1,000 crores. Net profit is 1 crore and has become 5 crore, right? Should they constitute? I'm so sorry if this is happening every time. Yeah, feel bad. Yeah. See, company does not fulfill any of the criteria as on 31/3/2021. See, subsequently it's increasing, no doubt. But it will be there only for the next year. Current year, no. Correct? So this is the answer. Yeah. See, for the exam purpose, they are asking questions like this. You should not question. No, but boss, from 31/3/21 whole year ka turnover 500. Whereas in 6 months itself we got 1,000. Nothing. Sir, I've seen better growth than this, sir. I've seen companies showing better growth than this. Okay. Now, when a company ceases to be a company covered under this section, still it has to continue for 3 financial years. Okay. Every company which ceases to be a company for 3 consecutive financial years only will not be required. So 1 year you can't go. 1 year you get out. No. Second year, third year, 3 consecutive years you should not come. Then you come. Okay. So once it has constituted a CSR committee, it has to keep going. For 3 consecutive financial years, it should go below. Then only. See, you have to constitute a corporate social responsibility committee, but where the amount to be spent, we'll be calculating that. Now, you calculate that on the profit and it does not exceed 50 lakhs, then no need for CSR committee. It is enough if the board itself acts as a CSR committee. Okay. So how to calculate that? Okay. I will quickly take you through that and then we can come back. Yeah. See, this is the very important provision. I'm sorry. This is very important. Which are the companies which are required to form CSR committee? We know. Net worth, turnover, profit. Once they come into this, they have to form a CSR committee. Every company which is required to form a CSR committee should ensure that it spends in every financial year at least 2% of the average net profits of the 3 immediately preceding financial years. So what you have to do? You have to take the net profits of 3 immediately preceding financial years. 3 years you have to take total, divided by 3. You get average net profit. On that average, you have to calculate 2%. See, the idea is in 1 year it may go up, another year it may come down. So they are saying smoothen it out. Don't take every year 2%. So they are not saying 2% of the net profit of every year. No. They are saying, look here, 1 year it may go high, another year it may go low. So 3 years is smoothen it. Take the average. On that average, you calculate 2%. Consistently spend it. Right? So that is the rule. 2% of the average net profits of 3 immediately preceding financial years. So this company was not completed 3 financial years are okay. So there are 2 years, 1 year, 1. Preference shall be given to the local area. And also there could be certain projects that are more than 1 year. Sir, I can't always spend the entire amount in 1 year, sir. For example, one of our, in my Rotary Club, we did a project. This again, I am supporting a school. From that school only, I select these children who go for engineering and all. And it's from where economically weaker section of society are studying, very near my place. I go there and I talk to them also. And so these children, one major problem was the school building. There was no toilet block. Okay, hygiene and all. So we decided that, of course, the project was about 40, 50, 55 lakhs. I couldn't do it on my own. So I gave 5 lakhs, but I included my Rotary Club and they came in. But they also didn't have enough money. So we could collect about 25 lakhs. Then we got CSR funding. Now that CSR funding, when they give, we can't spend it in 1 year now. So this is a multi-year project now. Just started in 1 year. It took almost 1 year to complete. Then third year only we were able to complete it. So that's called ongoing project. And now that toilet block is come, neatly, beautiful, separately for girls, separately for boys. You can see the smile of the children when they use it and they go. So that brings them to school because some of them do not have such a facility at home. They come here. I'm not joking. Friends, I am a pure capitalist, but don't think that I have no heart. Okay, I have too much of heart. That is the problem. Okay, so when you see these children, feel happy. No, but doesn't mean I can throw free. That's all I'm saying. Okay, there should be some link to growth of the person. Then this is my view, not necessarily a correct view. There will be other views also linked to company. Anyway, so what I'm trying to tell here is there could be ongoing projects which are capital items, or it may need more than 1 year to complete. No problem. You can set aside. In those cases, you have to clearly set aside for the multi-year project and say, this money we are not spending this year. We are going to spend it over an ongoing project. Okay. You can do that. Nothing wrong. Okay. Now, here's the problem again. Tirupati Limited, a listed company, has made the following profits. They are all eligible profits. Now, what should be transferred or what should be spent? So, last 3 years, 2021, 2022, 2023, total 150, divided by 50, 2% of that, divided by 3, you get 50. 2% of that, you get 1 crore. So, this year, 1 crore has to be spent. Okay. You have to spend the entire 1 crore, or else you have to put it aside for an ongoing project. If you do not spend, what happens? Failure to spend. You should tell the reason why. Also, if the unspent portion is not relating to any ongoing project. So you can always say, so this 1 crore we are not spending this year, we are keeping it. We have already spent 10 lakhs for foundation. We are building a toilet block. We are building this. We are constructing a bus shelter for the community. In this year, we spent 10 lakhs. Balance we'll spend in the next year. Project cost is so much. Just giving examples. There are many, many examples. Unless it is for an ongoing project, if you have not spent it, then within 6 months, better give it to him. Okay. Now, any surplus arising out of the CSR activities. Now, see, failure to spend is one thing, yeah. Suppose, as part of the CSR, you are encouraging tribal community to come out with handicrafts, which you are helping them to market. Now, that CSR activity is generating surplus. You can't take it. It shall not come under the business profit. You can't say, no, I only invested, now I'll take it out. No. It should be plowed back into the same project or should be transferred to the unspent CSR account. Okay. And spent in pursuance of CSR policy. We'll see that. So what you can do is within 6 months, you have to transfer it to the fund. Okay. Now, if I have done excess expenditure, in this year I spent more than required. I'm supposed to only spend 1 crore. I spent 2 crores. Then that excess amount, you can set it off. Other than surplus arising out of CSR, that you have to spend it in that year itself. Otherwise, deposit it. Okay. Any excess that you have spent out of your pocket, you can adjust it over the succeeding 3 financial years. So next year, if you are supposed to spend 2 crore, out of that 1 crore you can take from the surplus. Already excess you have spent now, that you can adjust. So carry forward and set off. Hello. Mary Limited is a listed company, 1,200 crores. CSR committee formulated and recommended a CSR project. The company finalized the project, which require funds at 5% of the average. Will the excess be counted in subsequent financial years? Absolutely. Straight away, this is the answer. You can. Suppose I incur any capital expenditure on CSR, what do I do? Capital expenditure. Okay. Such capital accounts should not be in the balance sheet of the company. See, it should be held in the name of a Section 8 company or a registered public trust or a registered society, etc. See, in the case of the toilet project, now it was funded by CSR from 2 large companies. So clearly, what we did now after the building was constructed, we handed, see, building was anyway constructed on the land of the school. The property belonged to a trust. So this school building, this toilet block building will go to the trust balance sheet. That is the school balance sheet, which will be combined with the trust. Okay. So this is how it should be done. Okay. In case you have not spent it, then the rule is very clear. First, you are to spend it before the end of the financial year. If not, you should transfer it within 30 days to a special account called Unspent Corporate Social Responsibility account. Right? You should transfer it within 30 days. That can be spent within 3 financial years. They give you time, 3 financial years. In case even after 3 years you are not able to use, then within 30 days from the date of completion, you have to transfer it to the fund, to the government fund. So spend, not spend, within 30 days, transfer it to a separate account. You can't rotate it, keep it separate, use it for next 3 years. CSR may not used, then within 30 days from the last year, transfer. There's no fund as of now specified. It will be transferred to any fund included in Schedule 7, meaning the government fund. Okay. The board's report should also give the various particulars. Also, one more thing. See, the administrative costs. See, the administrative overhead shall not exceed 5% of the total CSR expenses. Sir, we are talking about Tata Group, Indian Oil Corporation. See the profit. You calculate 2% of the average net profits. The amount involved will be huge. Even to spend this money, I need a plan. I need a structure. Okay. So I need to have an administrative mechanism. I can't, just like that, I can't keep writing checks. I need to get. So that will be distributed. So this administrative setup will cost money. No problem. You can spend it. But the total amount on this administrative overhead should not exceed 5% of the total CSR expenses. See, in our example, we got now 1 crore. 1 crore now. Out of this 1 crore, you can 5%. Okay, out of this 1 crore, 5% of 1 crore. Correct? 5 lakhs you can spend for administrative expenses. Right? Beyond that, you cannot spend it. Also, where the CSR obligation is 10 crore or more, then you should hire a agency for impact assessment through an independent agency, whether the CSR has made an impact. So when the company has a CSR obligation of 10 crore or more, right? 10 crore or more, then they have to get impact assessment. So they should select projects. Any single project where your outlay, the amount to spend is 1 crore or more, then for that project, you should have an impact assessment. Impact assessment is a study guide. So the agency will go and they will ask the beneficiaries, have you got anything? What is the benefit? It is it's qualitative assessment, but they will report and say this impact has been there, like that one. Okay. And this will also be taken up by the board. Okay. Now, for the purpose of that impact, you will spend some money now. That will also be taken as CSR spending. That will also be taken as CSR spending. But it should not exceed 5% of the total CSR expenditure or 50 lakhs. So, taking that example of 1 crore, assuming, no, you can't have, no, it should be more than 10 crore. Let us say that in last year I have to spend 50 crores, right? 50 crores. Out of that, let us say that 6 projects are more than 1 crore. Whatever. I have to spend some money now. My total CSR expense is 50 crore. Now, for impact assessment, how much I can spend? My commitment is 50 crore. So, 5% of the total expenditure I can do for impact. See, this is in addition to the administrative expense. Administrative expense, that is another 5% you can spend. So, if my total CSR is to be spent is 50 crore, then 5% of that, 2 crore 50 lakhs, I can spend for impact assessment. Another 2.5 I can spend for administrative. But here they put a cap. They say 5% or 50 lakh, whichever is less. So 50 crore, then I can spend 5% or 50 lakhs, whichever is less. So up to 50 lakhs I can spend for impact assessment. That will be included in my CSR. So for 50 crore, this 50 lakh also will be taken. In addition to that, I can do administrative expense up to 2.5 crores, which is 5%. Okay. Hope this is clear. Beautiful, sir. So this composition of CSR committee, policy and all should be disclosed in the board's report. If not, if you put it in the website, then no need for board's report. Okay. If there is a default in complying with the provisions of section 135, then as usual penalty. Twice the amount required to be transferred by the company to the fund, or 1 crore, whichever is less. Okay. Company. Officers, 1/10 of the amount required to be transferred, or 2 lakhs, whichever is less. Why? That is why I'm saying, why all this? If you are not able to spend it, transfer it to the Prime Minister, sleep peacefully. So in addition to this, they can give directions for whether not applicable and all that. So any quick questions on CSR? Friends, important. Companies which are required to form a CSR committee, limits 2% of the average net profits of the immediately preceding 3 years. Average net profits of the 3 years, 2% thereof. Administrative overhead cannot exceed 5% of the, where the total CSR expense is more than 10 lakhs, 10 crore, then those projects which are more than 1 crore outlay, impact assessment has to be done. The amount spent for the impact assessment will also be taken as CSR expense, but it cannot be more than 5% of the CSR amount to be spent, or 50 lakh, whichever is less. This is a summary. See, what you should do, you should take notes. See, just this is nothing to do with you. I'm studying a spiritual topic and I'm going to write an exam. So what I do now, as I prepare, I take notes. I take notes in short form. Now, and I keep writing. I take notes and I keep writing. And then, before the exam, I'll keep revising this notes only. I won't read the book. This notes only I'll read. This is how I've been doing for right from my BCom exam. I'm doing this here. So, suggestion. So, notes, if you write now, read the material, institute material, read. Based on that, have a small notebook, kacha notebook, where you make notes. That notes will become your short form notes. Then keep reading that. See, suppose in the memory you're there, you have a doubt, you'll be able to refer to the notes immediately, rather than go to the institute material, open it, search. This is humble suggestion for how to prepare for the exam. Okay. I do it, therefore, and I'm 60 now and I still do it. Okay. So I will check up with the study material and I will get back to you on this. Often I'm unable to answer this. If it has changed, my apologies. I will correct it in my next class when I come. Don't write the slides as notes. Yeah. From that, you create further short form and keep it. Now, actually, my slide itself is notes. You can refer. But if you can further condense it from exam point of view. Question banks are there. Yeah, you go to local bookshop. Kitab wala hai na, you just go there, kitab. There he will tell you, scanner hai, cracker hai. So many are there. Just go to the bookshop and spend 1 hour there. As you are a student now, whichever city you are, there's a local bookshop, lawyer, legal bookseller, or whatever. Go there or go online. Taxman, see, do some research. In those days, we used to do that. I used to go to the bookshop. I will spend 1 hour, 2 hours going through all the available material, and I will select myself what I need. Okay, but offhand there are a lot of question banks. Yeah, just go to the bookshop and see. Just be careful. Okay, I can't recommend anything, but I strongly suggest that you have any analysis arranged topic wise with the density of questions is good. Density of question. Which topic more questions are coming? So, such an analysis, if it is there, it's good. Such books are there. I don't have to name the brand. Go to the bookshop. Bookshop seller will tell you. Okay. Once upon a time, we used to take 20 guideline answers, 20 side answers, and we used to prepare our question bank. Yeah, go online. If it's not on your book, go online. Lot of stuff. Or go to Google Gemini. Yeah. For me, today I don't rely on any human being. Okay, Google Gemini hai. Just to go and I'll ask question, it will give the answer. I'll go on with my life. I'm not saying you should not ask me. I'm saying, hey, sit in my office, I keep on saying no. Today, so Karlo Dunia Mutti mein. Everything is in your hand. Okay. But still, since you're asking, see, what you need from me is not answers to questions like this, but broader. See, I told now how to take notes. This is something that you have to do. Okay. There is no ready-made. You have to go through the process of writing notes will help you to remember. Okay. My experience. Those days and all, what was there? 1987, when I wrote my CA final exam, no question bank. Yeah. Only institute size answer will be there. You have to buy, we will analyze it. Then scanner came. Arun Sachdeva and scanner came. Then so many other books have come. How to make, you write now, start writing. How to make. You take a column, okay, go to the pen, read, whatever you remember, write. That's all. Keep on writing. Then refer again. If you're not written correctly, correct it. Use color ink. Come on, yeah. You're not kids, yeah. How to make? Everybody has their own level of memory. So if you feel your memory is not good, write times, underline, write in red. These are all methods. Don't think that I'm getting irritated. But see, how long we are going to depend on other people? I told you now. See, this capitalism goes to the root of it. Not being dependent on anybody. That is the ultimate capitalism. Okay? Not relying on anybody. Being independent on your own. That is, once you reach that level now, then you will understand the capitalism I'm talking about. Okay, quickly, the last topic we'll cover and then we'll move on. See, it's not that I don't want to answer questions like that, but A, the time, B, even if I tell you 100 hours I teach how to take notes, you take notes once, then you will learn automatically. Carlo, please do it. Go there and do it. Read the material once, from memory, write, and then verify you got your notes. Like that, do for all the topics. Do it. Okay. Instead of asking how, jump into the well, swim. You'll suddenly find you know how to swim. Okay. You don't need anybody to teach you. Okay. Now, last topic, internal audit. With that, we can close this session. It may take another 5 minutes that way, no problem. Because once we closed 5 minutes early, so today I will close 5 minutes late. Okay. So, internal audit is compulsory. Again, only for certain companies. Listed company, yes. Unlisted company, again, paid up share capital of 50 crore or more, turnover of 200 crore or more, outstanding loan 100 crore or more, outstanding deposits, only deposits here. Okay, because loan borrowing from banks or PFI 100 crores, deposits 25 crores for unlisted public company. Now, this is something you can take notes. My slide is there. Go through it 3 times, 4 times, then write. Then check. Notes are ready. Then read from the notes again. Because these are the things where they will want to check you whether you are aware of the limits. Private company also needs internal audit if the turnover is 200 crores or more, or outstanding borrowings are 100 crores or more. Pretty high. Turnover of 200 crores or more, outstanding loans or borrowings 100 crores or more. Now, Nataraj Limited is an unlisted public company having paid up share capital of 80 crores. Turnover of the company was 110 crores. Paid up share capital 80 crore. Turnover 110 crore. Is it mandatory? See, even if one criteria is satisfied, gone. Turnover is not satisfied. But paid up share capital, 50 now, they are having 80. So, covered. Okay. So, Nataraj is supposed to have. Kim Private Limited was incorporated on 30th September. It has a paid up share capital of 45 and a turnover of 250 crores. Okay. Accounts manager has intimated that they are not required to appoint internal auditor. Maybe he doesn't like internal audit. He is wrong because they are fulfilling the turnover criteria, more than 200 crore. Therefore, so this is a typical question in the exam. 2 times they have asked. Okay, maybe they'll ask you one more time. So all you need to do is be thorough with this, and be ready. My suggestion: no, prepare a chart. NFRA, rotation of auditor, internal auditor. There are many commonalities. Put a chart. Suddenly you'll find you remember everything. It's my humble suggestion. How? Only by doing. Okay. Who can be internal auditor? Chartered accountant, cost accountant, other professional. Okay, somebody. I don't know who. Best is chartered accountant, yeah. Maybe cost accountants, yes. On operational part, they are good. Okay. Internal auditor may or may not be an employee. Statutory auditor, we'll be seeing, cannot be an employee. But internal auditor may be an employee. And also a chartered accountant in practice. Okay. The audit committee in consideration of the board, in consultation of the internal auditor, will formulate the internal audit format and all. So this is the thing. So we have all this. So I didn't need that extra 5 minutes also. I seriously don't know what is the other professional. Maybe our friends, the company secretaries, I don't know whether they are competent, whether they are qualified. Maybe they are. Maybe they think they are. We don't know. Okay. So thank you very much for your wonderful, support and being here. And we answered, to my knowledge, about 25 MCQs, 23 MCQs. Okay. This time, 23 multiple choice questions were covered. And questions were also asked during the session, which you have answered. Thank you very much for your. I don't know, yeah, seriously, I will write to the MC and I will tell you. I seriously don't know who are the other professionals. When they notify, I'll definitely tell you. I don't know. MCQ, I don't know. Notes already shared. Regarding that CSR aim, that 2% or 50 lakhs, I will check up and I will get back. Next session, I will tell you. Thank you very much. Have a great evening ahead. Bye. Yes, sir. Done. Go, sir.